Vietnam shares have hit a record high after index provider FTSE Russell announced its upgrade to emerging market status, a move that could bring in billions of investment. The country's main VNI index has risen 30% this year, making it one of the top-performing stock markets in Asia. While the main exchange for emerging markets globally, the MSCI index, well, that's up 28% on the same time last year. Let's talk now to Fiona Cincotta, who's an analyst at City Index. Good to see you again, Fiona. So there's been this upgrade for Vietnam. What kind of difference could that make to it?
Yeah, so I mean, there have been a lot of work, or has been a lot of work behind the scenes to get to where we are. So there have been, improved settlement technologies. There's been improved regulatory and legal reforms. There have been reforms as far as funding is concerned. And all this means that, barriers have been lowered to foreign investors now. If we do see this continue to go through, then it does mean that liquidity is going to be greatly improved. We're going to see, passive funds that track the different indices around the globe. They're going to be getting involved, which broadens the the investor base for this index and could reduce the spreads. That's the difference between the buy and the sell for particular stocks on the indices. So this is good news.
And what about emerging markets more broadly? This has now been designated emerging market status, but they, more broadly, have been on a strong run, haven't they? Why is that?
Yes, we've seen the MSCI is up 28% this year, so a really strong rise. And I think a lot of this has to do with actually what we're seeing going on in the US dollar and over in the US. So the US dollar is actually significantly weaker, trades down around 10% this year, its worst year for really quite, well, since 1970, so for a long time. Now, what that does mean is it does mean that it's more attractive. Emerging markets become more attractive for investors, as also local currency earnings are improved as the dollar is weaker. So, and we're also seeing as well that rotation away from the US. Now, US stocks are obviously now at record highs, but there has been this sense of looking to diversify away from the US, and emerging markets have very much been at the forefront of that diversification.
And there was a time, wasn't there, when emerging markets were seen as perhaps being more risky in terms of investment. Are they now becoming, let's call them, more mainstream?
I think there is a sense that because of the macroeconomic issues that perhaps we are seeing elsewhere in the globe, there's been a lot of uncertainty as far as what's been going on in the US, as far as trade is concerned, government shutdowns, the weaker US dollar. In Europe, you've got stagnant growth, you've got some political crises as well. So, it is looking to be potentially a good alternative to move away from the more Western problems that we've been seeing. And the returns tend to be much better when they do come around. So that risk-reward payoff can be really quite worth it in some occasions.
So picking up on some of the better performers in emerging markets, many of them in Asia, like Korea, Vietnam, as we've just mentioned, how much of that is surrounding the enthusiasm on AI and semiconductors?
Yes, a lot of it has been directed there, because these are seen as sort of big players as far as AI chips are concerned, as far as equipment for data center is concerned. And obviously this is a trade that is attracting a lot of attention at the moment. And, it's almost as if you see the broadening out of that AI trade, which we know has helped drive the US stock markets to record highs. We're also now seeing a similar performance. We've seen record highs for certain indices across across Asia as well.
Fiona, thanks very much. Great to talk to you. That's Fiona Cincotta from City Index.